Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So we'll go through our regular agenda today with a market update, update the earnings trades, and then Joe's analysis at the end. So let's get started. Okay. So kind of big moves yesterday. SPX and Russell both flipped back into state one. So that should be a good sign for the markets. The other one you can see down here, XLF went from 2 to 1. Uh, So we only have four of the sectors in state one. Kind of interesting which ones those are. That's like financials, industrials, staples, and utilities. So, and obviously the real estate's in eight there. That's the only one down there. Everything else, kind of doing the 1, 2 type thing, which is overall bullish for the market. So pie wise, we did flip. It's a pretty big move from last week. 34. Now we're over 50. So just over 50, and obviously the ones jumped up. So all those twos, we're kind of watching to see which way they're going to break, either the 4 or 1, and pretty much most of them went to back to 1. So let's take a look at the market pulse here. So this is for the states, individual states. You can see we had that crossover here, where the ones took over the eights. That was on the 6th. So obviously that's a very bullish sign. So if we pull out and kind of look at the twos and fours, so we had that big spike in the twos, and we're seeing which way they're going to break. Either fours, and the fours pretty much flatlined here and eventually turned around. So those twos pretty much all went back into ones. You can see that here. That's kind of the 19th was the high point for those state twos, and since then they've just been dropping, and it's pretty much the ones right now overtaking the eights, and it's usually a very bullish sign when that occurs. So we'll look at the key levels, but it's kind of looking bullish right now. Same thing on the lows, new highs, new lows. You can see with that one spike, 200 on 236 on the lows there, but it was short-lived. The spike in lows, and now we're back. A couple days in a row here, around 200 or more on the highs. So it's very bullish. When we get these greens, it's for the highs, it's a good bullish sign overall. So that's looking good, and to see if they can maintain. This was pretty crazy. This is the daily transitions. If you look on the homepage, it'll give you like the count of all the symbols. So that's a huge number for state one transitions, 231. So you can have that back here, but I mean, you pull it back, we haven't seen anything like that since this was when November 2020. So it's been a long time since we had a spike that big as far as state one. So it's looking overall bullish. I know we're down just a smidge today, but that's kind of what things are pointing to. So SPX here, state one. So obviously we want to get above and stay above this entry price here, 58. 51.88, let's just call it. So want to get above that, and then from there typically kind of walks up, get a retracement and then go like that. So that's kind of the typical path, over this average days. So if we get above, if we can stay above this entry price, I would be very bullish. I think we'd make a run at those targets. And then, obviously we'll get some resistance there. And then, but the key is we just don't want to see things like walk down here. We want to get above that entry price and stay above there. So that's where we're at. Just started a new state one. Obviously, the last one was really good. So, just have to wait and see and kind of look at the where we are on the price, and then obviously we have these resistance up to the top, and then all right, someone's. So I'm just muting people. Hear background noise. So okay. Where was it? Yeah, so this, we got resistance levels. Obviously, the top of our range, we have 5,000 to 5,400. So this target 1-2 kind of resistance area is right near the top of our current range. So, well, that's kind of the top end resistance. Nothing else really in between there. So, key thing, entry price, support or resistance, depending on where we're at, and then to the downside, we got our stop here at 50.72, and then the bottom of the range is 5,000. So that 5,000 held up real good. When it got tested there. So that's it for SPX. So we'll see how this state one does. So if we look at the charts here, I'll just pull up the 5,000 level. So we tested that a couple times, and then that's pretty much support. That was the number, and just took off here on after the second. So we're above the 50 and the 20, so you could look at those also as support. Obviously want to stay above definitely the 50, and we'll see if the 20 is the same thing as last time, but no guarantees there. But definitely want to stay above the 50, and see if we can make a run up towards the top end of the range, which is 5,400, and that's our floor there, 5,000. So that's it for SPX. Let's see. All right, let me pull up Russell. Same thing, just state one. Typically will follow that same track. We want to stay above entry price, and pretty much same picture. I think it's a good sign too, usually that the SPX and Russell transitioned the same day into one, so that should be a good sign. So a lot of bullish signs. So just have to be kind of watch the levels to make sure everything's following track and staying above the 50-day. So the top end of this range is 2,100. Here I'll do all the things. So that has been a real problem for Russell at 2,100. Bottom is this 19 here. So that's going to be our big line in the sand for Russell. It's at 2,100 if we get up there. So the longer we kind of hang around there, the more likely I think it is that we'll get through it and make highs. But we got to get to that level. It's been really problematic getting above there and staying above there. So bottom of the range 19, and just staying above the the 50. Obviously we're above that here. It's kind of mid-range, right around 2,000. So what is it, 2017? So that's what we want to do, stay above those and try and break through. I think what's really helped, clear this, is 10-year dropped. So we're at right below 4.5. It said get below 4.5, it's a tailwind for the market. So we popped up, we were getting up there pretty high, 4.7. So we've dropped back down. I think anything below 4.5 is fine, but once we start pushing above there, things get a little, the higher we go, the worse it is, I think, for the market. So we can stay below 4.5. I think we're clear as far as the market. So it's been a welcome move overall. Okay, what else we got? All right, so Fed, nothing really changed here. There's only like a little bit of movement. I won't go through them all, but it's kind of slanted more towards September now. So it hasn't moved that much overall, but September possibly would be the first. And then, December is pretty much similar, 1 to 2 overall cuts for the year. So nothing basically for the summer right now, as of right now, but we'll see if that changes at all. And see, Fed balance sheet had decent runoff, so they're just continuing. So haven't heard any other bank issues besides that one. So they're just going to keep trying to run this thing off until I know that in the talk um, the chairman said they're going to slow down somewhat the runoff. So we'll see if that, they've been pretty much doing a straight trend line here. So we'll see if it actually starts slowing down or not. But Ned mentioned that was kind of the big thing I took away from the press conference and questions. So I think that was it. Pretty quick rundown. I'll open it up to questions, comments on the market overall. Feel free to unmute yourself.
No comments. Well, I'll throw one in. I've switched over to more range-bound trades here for the start of summer when implied volatility kind of shrinks up in the summer. So
Yeah.
I've sort of switched to that. I think got all we're going to get from the earnings side of things. We'll see what Joe says in a few minutes if he's going to put a chart there. But we know now what we're going to know from all the big ones anyway. So I don't see any catalysts on the near horizon for a big bull push or a big bear pullback that we, because we already have a little. So that's where I'm going is kind of, I'm range bounding for a while, for probably a quarter or so.
Okay. Yeah, I mean, I could definitely see that. If we run into those like Russell can't get above 2100, then um,
yeah, I don't think Russell's going to go anywhere until there's the first rate cut actually happens. But I will. One thing I will say is I'll pay attention to the Delphian trade. The other trades that are in addition to the earnings trades are we're going to focus on as for candidates in the future. So thanks for that, guys.
Yeah, I was telling Joe, I was like, I track those every day, and kind of perk up when I see like Microsoft or something like that come in there, and it's usually near market bottoms that like that kind of stock gets into the trades, outside of some kind of like disaster or something like that. But it used to be Apple, but now I just kind of look for like
Yeah, Nvidia maybe. Nvidia, I think Nvidia reports on the 22nd, so that will I think be the last midterm tell on the AI trade, whether it's going to get more, maybe it'll get more momentum after Nvidia reports. Maybe it'll chop around too, but I think it's on the 22nd. In which case, I'll be in one of the national parks in Utah, so I won't even know. So for a couple of days after.
Very cool. Okay, thanks, Dave. Anyone else? Questions, comments? All right. That's kind of a quick one. So I'll go through the earnings stuff real quick here. So obviously not been a great quarter. It's come back a little. Bullish pre-runners are still down. We got 2 open. This one will close out today. Yeah, both of these will close out today before earnings. So we're down a little over 1,000. Bullish pre-runners not good this time. 1, 2, 3, 4. So it's like 50-50 wins and losses. So we were worried about Q1, so it lived up to the hype. We have one bearish pre-runner that was that closed out a winner. Bullish runners. So we're a little above water. We've got 5 closed. We got 2 open here. So we had 1 loss, and then so 4 and 1 on those so far, and up slightly. So that one's turned around. So really, it's just the bullish pre-runners that were bad. So vol rise, those all closed out. We had 3 trades, all of them closed out. You know, so one hit the profit, like over 25, and then the other 2, still close out winners before the earnings. But overall, this one's doing good. And then the bearish runners, I think we got 2 open trades, so those are fairly new. So we'll see how those do. And then the last one's a non-mover. So we need little help on this Pfizer trade. It's gone against us. So we had 1 closeout for NXPI was a winner. So this is a gold miner. So that's we got till the 17th on that one. This one we need some help. Pfizer before Friday. To come back. So I've been watching that one. But yeah, so that's it on earnings. So kind of I'd say at this point, slightly down. This is kind of typical for the last at least 3 Q1s now. Hopefully we can flip it green. So that's it on the earnings. We'll keep tracking them and see if anyone has questions or comments on that.
Hey Josh, this is Russ.
Hey, Bruce.
A couple questions and comments as far as the earning trades.
Mm-hmm.
I know we're going back to the history, but we're not looking at current events that are affecting the trades immensely. I mean, if you got the overbought conditions, everything's
Yeah.
in the red, and we're still purchasing the stock. I mean, that I don't understand. I mean,
Yeah, that's like a whole nother kind of layer of analysis. Like my market update and overlaying that with the earnings trades. Like we just do the earnings and like the daily trades. Those are just like systematic, so we don't even look at the market. But as far as those type of trades, but yeah, I mean, if you're trading them, you probably want to listen to like the market update and then apply it as the trades come out. You know.
Yeah, I've seen so many stocks, like MGM, Hilton and all that, we're losing 40, 50, 60, 80% on those stocks and we don't have any stop losses on it, but yet we have 25% gain on it. I mean,
Mhm.
I think that needs to be incorporated with, the trades, not just
Yeah,
take it to the end. I mean, if it goes down to 25, we need to sell it.
yeah, yeah. I mean, that's but I think incorporating your own, like how you trade into the your style, what you're comfortable with. We just lay out the basics. So like here's trades that have done well, and here's how we tested them. So it's just kind of over time. I mean, you can see the results for the earnings, but yeah, you're gonna have losing trades, right? But over time, like the
Yeah, but
earnings
over
plan
the
has done
last
well.
but the last few quarters haven't been, pretty good. I mean, they haven't been good at all. We're losing thousands of dollars and, the profit gain isn't there.
Yeah, I mean, I think the Q1s have been bad, but other than that, like I can pull up. Uh,
I mean, if there's a way of trying to incorporate current events with the trade before it's
mhm,
made, you
yeah,
know, like the high
yeah,
probability ones, it's current events, if it's a extreme
right,
high or low, there's a stock to buy or sell, but
mhm,
we're not doing that with the earnings. We're just going by history.
right. Well, the other ones, I mean, that's just like historical. It's like hitting some kind of, either like state two, it hits target two, or, um, you know, and, like has a Keltner channel break.
Right.
So it's just, they're all like systematic, but I mean, these are, it's not, like if Q2 was like really good and, Q3 was, we had a couple bearish runners that ate it up, but, Q4 was good. So it's just like a longer term, long, long run, it makes money, but you're gonna have some, some losses, right? Just like the daily trades too. I mean, you're gonna lose some of those, but if you want to try and, everyone's obviously welcome to do more testing. Like you can go into that earnings, what is it? The earnings scanner, and you're looking at trades. You can test all the different criteria. If you want to change, you're like, okay, I want to do, 25% stop, or you can test all that too and see how things go.
Yeah, Josh, my comment to that is you should apply your own viewpoint to the current outlook against whatever the recommendations are for the long-term systematic trades. I mean,
Mhm.
if you notice there's one that looks out of whack because it's been run up so much, don't take it.
Right.
It's a candidate list in my opinion. That's how I use it.
Mhm.
And that you can't. I don't think there's any system that can apply any short-term methodology to it that's, in addition to a systematic, long-term view of things or what you have compiled over time. The pandemic is still ruining everything for, over the last 10 years. We have what, 3 years of pandemic from 2020 till today. And what does that do for the last 10 years? It's an impact to that, well, you have to take that into consideration. That's what we do as traders all the time. We
Mhm.
apply what we know and what we think is an outlook compared to what's happened in the past.
Yeah.
So, don't criticize a system that is just giving you what it gives you. It gives you candidates, lots of candidates. So and then pick and choose over them. Ones that fit the current mold, take those trades. Ones that are outside of what you think the current, if you think the current uh, position for any stock is not going to be do well with the long-term trade, just don't take it, or
Mhm.
take the opposite side if you think. I've done that sometimes,
Yeah.
so it's a guideline. It's guidance, not take it verbatim. I would defer to Sudar Sadir, I'm sorry, Sadir, for long term. He's I think one of the few or only ones that have systematically applied this all the time. So if you want comments of how that, talk to him maybe offline a little bit, and maybe he can give you some guidance about applying short-term logic to long-term trading. But that's my view. Does not don't any system out there, it's going to have failures. There's no one system that's good all the time.
Right.
Period. You got to know a bunch of strategies and when to apply them. My opinion only. So,
Yeah. Like I
Hey,
said,
Russ, this is Joe. I just want to thank you for your comments, and feel free anytime to reach out to Josh or I, if you want to talk about, certain adjustments. But I think Dave put it well in terms of, we're basically offering a candidates list, and
Right.
not to take anything away from Sadir, but I think his approach he has spoken to over time is, he'll do different strike price adjustments, but I think he's working off of that candidates list. But again, don't hesitate to reach out to either one of us.
Okay, very good.
That's exactly right. So since my name was brought up, I use it as a candidates list, and I have, slightly different rules for each type of trade. I don't do the trades totally robotically.
mhm. Okay, well, thanks, Adair. Same you, Russ and Dave, appreciate it. Well, yeah, me and Joe talked about it, but yeah, I think, that's kind of the idea is like we're putting out trade ideas, right? And then, obviously you can test them yourself. You can alter those, strikes and kind of fit your, risk reward profiles, which is going to be different from, everyone. So, okay. Any other comments?
Art, not science.
Yeah. Yeah. Okay. All right. I'll hand over to you, Joe.
All right, Josh. Thank you. What happened? Okay, let me try to grab it here. Got some things. I gotta find my screens because I have want to talk about. I want to follow up just on last week's presidential elections, talk earnings a little bit, and then market leadership. What do you see? You just seeing my Zoom screen here?
Yeah. Yeah.
That isn't good. Let's see here. Okay.
There we go.
Yep. So, Dave's point, range bound possibly, but wow. I'm, back in the camp where, I think without question, surprises are to the upside, and I'll lay out, some of that in charts here. The correction really, bottomed out almost 3 weeks ago. Not in every instance, certainly, but it's interesting. Josh mentioned April 19th as the spike. I think that might have been the spike in new lows, but that for many of the charts, April 19th was the low. So, we're better part of almost 3 weeks out of the lows. And then, you get the impetus coming out of, last Wednesday's Fed discussion. And, I was frankly floored this morning or last night when I opened the platform and I saw Russell had gone to 1 with SPX. It had to be a month plus that Russell went into state 1 after NDX and SPX, back in the fall. So I thought that was surprising and constructive. And there are, a couple other things that I will address as we go along here. But when I started talking last week about the presidential elections, so I have the 4 that we have in our database. Okay, so left side of the longer term chart is basically this one is the 2008 election. And so, a day or two in there, the election was November 4th in 2008. And, as oftentimes I do, I just want people to take a look at the chart. And we remember 2008 and the financial crisis. And, basically, the S&P was around 1,000, for the election. It was months later that, the financial crisis and the markets bottomed out March 6th of 2009 at 666. And then, we kind of, we didn't take off, but we moved to the upside. So kind of net 1 year from the 2008 election, we were up about 5%, basically with a big drawdown in between in those first, 4 to 5 months. So that was 2008. And I just pulled up SPX. I did not pull up NDX also. And maybe we'll attack that at some time, but that was 2008. Here's 2012. Okay. November 6th, 2012, the S&P was right around 1430. And again, left side of the chart is essentially the election. Well, it was only a short time after, we got a little bit of a sell-off, and then, off we went. And, we went into a state 1 not far after the election, about a month after the election in 2012. And, the market did very, very well coming out of the 2012 election. Essentially 1430 in the S&P up to a high, you can see right side. I just took these 1 year out, and essentially we had a 24% return coming out of the election in 2012. A much, much better environment, clearly, than the 2008 financial crisis. But kind of interesting that state one came within a month of the election. Let's move to 2016, and you can probably guess. November 8th, 2016, the S&P was basically at 2140. 3 days after the election, we went into a pretty aggressive state one. And as you can see, we did nothing. We, rarely look back and, basically rallied most of the year. 21% higher 1 year later following the 2016 election. And, again, what caught my eye is that state one just a few days after the election, 2016. We go to 2020, and it was a November 3rd election. Markets were basically S&P 3370. Lo and behold, state one a couple days after the election on the 5th of November. And, there's that misconception. I think oftentimes we hear that the markets do better under a Republican president. I think that's been debunked at this point. And, certainly its best results over the last 4 elections with a run of 37%, 1 year out from the November 20th election. So I just want to lay that. And one thing about the state ones, obviously the markets were darn constructive post-election, with the exception of 2008. We know the markets hate uncertainty. And I think it's really interesting that, in 12, it took, about a month to go into a state one. But in 16 and 20, it was literally a couple days after the election, state one, and off we went. So, we'll see what the markets do between now and election day in November. I think they may surprise everybody. I think they may make it a little more difficult to figure because I think we may get a pretty big run between now and then, but time will tell. So that's the election analysis. Let me pull up a little something about earnings. So, we use FactSet. They come out with that nice piece each quarter, certainly, and I just want to review some of their recent findings. This is in the last couple of days. S&P 500 earnings now look to be up 5.2% in this quarter from a year earlier. Far better than what was expected, a month and a half ago. Analysts, according to FactSet, we're looking for about a 3.5% increase. So, that 5.2 they say is the strongest earning growth in nearly 2 years. One unusual thing that FactSet points out is that analysts have spent a lot of time in the last month lifting their current quarter estimates. Now, from time to time we talk about it, and basically those earnings estimates have been backloaded pretty big time, for 2024, well into, double digits in certainly the fourth quarter, maybe the third quarter too. But now, whoever the analysts are, whatever that group is, but I think, FactSet, they're pros at this. They spend an enormous amount of time and resources, I think. So where they had been looking for 9% earnings growth in the second quarter, and that's higher than I recall not too long ago, but that's what they're saying, now up to 9.8%. So heading north. And this last piece, the last time analysts spent the first month of a quarter raising rather than lowering estimates was during the fourth quarter of 2021. And of course, fourth quarter of 2021 was essentially the top of the market. But, that was with significant increases in interest rates coming. I think it's a completely different, environment. But, threw a little water on the parade there, I thought, just, referencing, the fourth quarter of 2021. Josh and I were talking about that. And as we go forward, anybody who has any thoughts about, signals that they remember, and granted, we had that Fed backdrop where, rates were going to rise. And maybe that was it more than anything. One thing I had mentioned to Josh is I remember Tesla was really, not Tesla, excuse me, Meta was one of the first stocks to top in the fourth quarter. Actually, it might have been the end of the third quarter. I think it was September of 2021. And, the NASDAQ topped in November, and then the S&P early January. But, as we have these weekly meetings, if you think of things that were kind of a bit of a signal to you that maybe the market was topping out in the fourth quarter of 21, beginning of 22, please talk about it, because, sometime in the next 6 to 18 months, I think the market's going to have a significant top, and it would be great to be able to kind of lean on some of the things that we remember after prior to the last bear market. So other charts I'd like to pull up. Well, I'll go back to, our homepage. And in terms of the indexes, Josh, we all both talked about SPX, Russell going into one. Then, I was looking at, you got UUP and gold. Gold, we know, has been in one for a long time. As far as the UUP, I don't really want to get into that, but, you've got these broader indices. And I think many of you probably know, the FTSE index is at all-time highs. I saw, a headline recently that the recession in Europe is over. I was pretty blown away when I, saw how high the FTSE was. So I thought, well, let me pull up these broader indices, from a chart perspective. We don't really look at these at all. So EEM, is, a combination of large and mid caps, from the emerging markets. The charts go back to COVID. All right. So just to give you perspective, but a lot of resistance, over the last year and a half. It looks like potentially we could be breaking out above that. There are about, I think, 800, stocks as part of the EEM, large and mid caps, again, from the emerging markets. But, certainly not in a downtrend. If anything, maybe getting ready to break out here. And, this thing has been in state one for, a few days. And then the other one is the EFA. And EFA is kind of more about Europe, Australia, Asia, and the Far East. Again, back to the COVID lows. Nice constructive chart. So, it's not the U.S. that by itself is, going to higher highs. There's a lot of company, around the world. So just want to point that out. And then going back to, as Josh pointed out, we've got 4 of the ETFs in bullish state. So I want to always talking about and thinking about where's the leadership going to come from coming out of the October, early November lows. It was, XLC and XLK, with NDX. That was our leadership back then. And so who's in one now? Josh pointed out, we got the utilities. I've got all the state one charts pulled up that we can take a peek at. If we're looking for utilities to be a leader, I think we're in trouble. So I'm not looking for that to be the case, but that's the one that has been in state one for the longest period at 21 days, or excuse me, at 20 days. You got XLP next, which are the consumer staples. Talked about that before, the pricing power of the consumer staples. When you talk about XLP, you're talking Procter & Gamble, Costco, Walmart, and Coke. They're all the most significant of the components in XLP. So I think it speaks to pricing power. XLP, actually backing up a little bit, the utility ETF is just 2% of the S&P. XLP comprises about 6%. And again, that's been in state one for 10 days. That wouldn't be bad leadership in the market. Next would be the industrials. Certainly some good names there with although where a lot of these ETFs have higher weight, a handful are higher weighted. That's not the case with the industrials. Nothing is more than 5%. You got General Electric, Union Pacific, Caterpillar, Uber, and Uber. They're all about 4 or 5%, and the rest of them are less than that. But the industrials do make up 9% of the S&P. And then finally, it's and always constructive, I think, to see those financials. Being a state one, that happened last night. XLF actually comprises 13% of the S&P. I don't know if, XLC and XLK, they're the ones that are larger. I'm not sure if there are any others, but you get up into the teens, those financials have a nice piece of the S&P. Berkshire's at 13%, JP Morgan at 10%, Visa, MasterCard, BAC, all between 5 and 10%, so some very good names. So let me just pull up those charts so you can have a look at them. There's XLU again, going back to the COVID lows to give you that perspective. Again, we're not looking for anything exciting coming out of the utilities, but it's probably a combination. Well, maybe not a combination, just people looking for dividend yields and higher lows in the utilities. Not one I'm too excited about. But you get into the consumer staples again. They're the COVID lows. We're not up against those May 22 all-time highs yet, but very constructive chart. We've got 10 days on average 38, so you got another month here. You got a long way to go in terms of an average move. These things, they're not rock and roll super volatility stocks, but it could be a nice underpinning for the market with those things. Fair distance to get to state or to target one, and I think that's worth keeping an eye on. These various targets for these things. Here are the industrials. You can see they're basically banging up against all-time highs here. Higher than the 2021 and 2022 highs. Maybe these things are going to prove to be pretty good leadership going forward. Let's take a peek at again. And it's the same thing with the Russell and the S&P. We're into state one now. For the most part, on average, you're talking an average of 30 days for the most part for these things to be in state one. And who knows, can we get back into, one of the crazy state ones that we just came out of not too long ago before we had the corrections. They're the industrials. And then last but not least are the financials. And again, banging up against all-time highs, COVID lows to your left. Really, really constructive charts. And how much of this is just driven by the worldwide liquidity? I have no clue, but I think you've got earnings momentum, you got a lot of liquidity, you got tons of higher lows. We had an albeit brief. We talked retracements a little bit. I'll pull them up next week, but for the most part, we didn't do any meaningful retracements. We got the one in the Russell, and nothing else. I don't believe was really close in terms of the S&P or the NASDAQ. So, I'll review them next week, but I think it really speaks to the underlying strength of the market. I did want to pull up XLC and XLK because, they were our leaders coming out of the, October lows. You can see banging up against all-time highs here. Very brief, we're still in state two, but, these state twos on average don't last very long, so they could turn at any point, and you can see, the average down move in these state two, their state twos is 3.5%, and what are we? We're up 2.5%. So chances are this thing, I'm guessing, along with XLK, which, it's a little bit off its, recent all-time highs, but very, very constructive charts. Same thing, we're 17 days, so I think this thing, could turn around at any time into a state one and give us additional momentum to the upside. Same situation as XLC. We are up in the state two, not down. So as Josh was saying, a lot of good things lining up here. I think, a lot of talking. I hope some of that resonates. They're really the charts I wanted to go through. Oh, no, I got one more thing. Yeah. Josh, take a look, and Josh referenced this. Here is a list of the large, in the history of our database, the greatest days with state one transitions. Yesterday was number 2 all time on the list. I just found this out about noon. I was totally blown away by that. I mean, Josh and I knew that 231 was high. That's number 2. So, it doesn't necessarily mean we're off the races, but I think it's just another kind of, figure things out. It's not a bad sign. And, we had talked about those large combination days of state 2 transitions last week. I think, and Josh is always talking about, do the state 2s transition into 4s or back to 1s? Well, I think, it's another piece of information suggesting that surprises are going to be to the upside. So 231, it just second all time, that just frankly blew me away. That's why I have these, for the most part, we know, what the market did, if you look at the time frame, it's November 5th, November 6th of 2020. That was the election. It took off. And just before it, October 5th, for the most part, 2020, we're languishing a little bit, but, nothing but upside. The 2 more charts that I have, I pulled up 2011 and I pulled up 2017. We know that September of 16, maybe we languished a little bit, but then took off again because we looked at that chart earlier. Let me pull up these 2 last S&P charts. This, I believe, was 17 or 11, excuse me. So, it was right around here. We did languish in 11. The summer of 11 also, that's when, the U.S. lost its AAA credit rating. And so there were special situations going on in the summer of 11. But, we got through that, and then, fairly constructive market. Then the other one, I think, was in 17. And, we had a big state 1 transition, and then off to the races we went. So always lots of numbers in the database. We can, I think, overwhelm ourselves with them if we allow ourselves to. I hope I'm not doing that for you today. And I'm not always trying to make a bullish case. It's just what I see coming out of the databases, and coupled with things like FactSet and the earnings foundation, there's nothing but surprises to the upside. So I will be quiet. Happy to take any comments or questions. Otherwise, back to you, Mr. Josh.
Joe, while you're still there, I got some, I don't want to say, I'll say observations, but I was surprised too on the Russell, the IWM, hitting state 1 just recently, and kind of like the even after the we're going to have higher inflation for longer kind of stance by the Fed. So that was impressive, and I didn't know, I didn't tie the industrials in until I just saw your chart. So thanks for that. Kind of gives a little bit of you say constructive point of view on where some markets are going. I read an article just yesterday, maybe it was the day before, but just in the last 2 days, about, it was a wind and solar kind of article, but I think it also ties in with the comments on IWM and the industrials. And it said, the essence of the article was that it usually takes about 15 months after allocation of capital is approved and projects break ground for projects, and this time it's longer. So it's I can't remember the exact date that the IRA all the money was allocated for IRA. Now those are just for those that don't understand the capital process, companies and governments, budget certain amounts and allocate it, but for expenditures to come later. And that's what my point here is that we have a lot of money that was allocated in the IRA that hasn't been spent yet. They're waiting to spend it on a lot of these reshoring efforts and bring industry back to the lower 48 here. So it's taken longer, is what they're saying. So maybe we're just starting to hit the timeline where they're starting to break ground with all the money that's spent. Now, if that's the case, and we're just getting to that, we're coming to that point lately, it'll be another few quarters or maybe even a year before we start seeing return on the capital building out investments or reshoring investments that are starting to take place now. I think Tesla can raise a from the ground to production. In a year, they built some of their gigafactories, but they're exceptional there. So there's reason, I think, to be constructive over the midterm and long-term periods here. Anyway, that's don't just because I think we're getting ready to actually spend the money that we've allocated in a bunch of projects. So look, I see that's a good sign for those two areas, for the IWM and industrials specifically. For the election, I saw you said pretty much doesn't matter which party wins. I think that's pretty much debunked for the major indices. However, I think there's industrial groups that are going to be quite impacted by whoever wins. Energy, I think, is going to be the biggest contestant in the for a specific group, depending on who wins the election. And my last comment was when you said that trading is or investing is part art, part science. I totally agree with that. I think the art part is picking the right strategy, and the science part is executing the strategy you pick. And I had to think Delphian provides they pretty much take the pain out of the execution part. Once you have the strategy, they can give you the strikes and everything for applying the strategy. So I think you guys provide great service for especially new investors. So anyway, we'll see what we see. I'm going to be you'll be saved from my commentary for probably the next month, because I'll be on my springtime seeing the grandkids and daughters trips, some national park visiting. So anyway, thanks for your charting here, Joe. I like to watch that part at the end all the time. Thanks.
Thank you, Dave. Have a great month.
Okay, good. Thanks, Dave. Anyone else? Questions, comments before we wrap it up? All right. Well, thank you all. See you next week.
Thanks, everybody.
Thank you.
Thanks.